Hey everybody, welcome. This is a past paper question from AQA Accounting Unit 3, January 2010. It was a request video from one of our students. I think he's from Birmingham, and I was struggling in this particular question. Let's simplify. This is a cash flow question. They said the summarized balance sheet for Slater 31st December 2009 and 2010 given. You know, the cash flow statements, you'll be given with two balance sheets, opening and closing. So you're going to compare both of these balance sheet to find your required answers, and you'll be given with one income statement. But look at this particular question. They didn't give you any income statement information. Rather, they give you some notes. Note 1 regarding property, plant and equipment. Note 2 regarding some share ratio. We'll take it in the finance activities and dividends. Also, your financing activities. And pretty much that's it. And then they asked you to prepare a cash flow statement for 2009. And it is always based on IAS 7. Some 18 marks and 2 for the good writing and presentation. And then in part B, there's 16 marks out of writing, asking you to analyze the cash flow statements, benefit to the potential stakeholders. Lots of stakeholders, especially the investors, they will be looking forward to see your cash flow statement. Are you capable of paying all the loan taken or interest taken? What is the strength of the business? Okay, so this time bear in mind there is no income statement given. Doesn't matter. What do we do? There are 3 activities we do. We'll start with operating activities, then investing activities, then financing activities. Okay, so these are the 3 activities. There's a set pro forma. Okay, at first I will show you the pro forma and we will follow the pro forma. Okay, and the pro forma is down there. There are quite a few workings, like 8 to 9 workings. I have set that pro forma just according to the workings. Okay, here we start. Slater Holly statement of cash flow statement for the year ended 31st December 2009. What is the pro forma? As we said, we start with operating activities. The very first thing we start, profit from operation or operating profit. That you might have to do workings. It will not be given. Sometimes it's given and sometimes not. I have seen in this particular question it's not given. We'll work it out. Add any depreciation. This is a non-cash expense. That's why you add a less any loss or profit on disposal. Why? Because we already deal these things into the financing activity. That's why it should be adjusted here. Any inventory, trade receivables, trade payables should be adjusted. These are known as working capital. Any increase or decrease, we'll be dealing with it. And then you get cash from operating activities. Interest and taxes should be paid. Then you get your net cash flow from operating activities. And further down there are a couple of more investing activities, and in the investing activities only 2 items. If you purchase any non-current asset, it makes your cash down. That's why it's a minus. Disposal of non-current asset, you add it, you get net cash flow from investing activities. Moving to the third bit, financing activities. Share issue makes your cash up, so plus. Any loan taken could be up. Loan prepayment or repayment is down. Dividend makes your cash down. You get net cash flow. Then you just get net increase or decrease, and cash equivalent. Add with your opening cash and cash equivalent, you get the closing. That's all about it. Okay, so we will start with the operating profit, working number 1. Let's look for that. Yeah, in this particular question you need to work it out. Yeah. Okay, let me take my eraser and delete it. All right, red pen. Yes. Okay, now working number 1. Workings. I need my operating profit. Now, there's no income statement, no operating profit given. But what is given is your retained earnings information given. We're going to work out on this retained earning information. Okay, so to find your operating profit, we do a statement of changes in equity. If you remember the formula, we start with opening retained earnings plus profit for the year less any dividend less, or it could be plus transfer, yes, you're right, to or from general reserve. Okay, so the pound sign, opening retained earnings, profit is the balancing figure we're looking for, any dividend, any transfer. Okay, opening retained earnings is over here, 113, and we don't know the profit. The dividend at the bottom, if we can see down there, 49,000 we paid. We'll take it into our statement of changes in equity, 49. Bear in mind these are in thousand. Students very often does this mistake, they don't take it. It's minus. I don't see any transfer nowhere, so it's blank. What you're supposed to get is your closing retained earnings over here. Okay, what is your closing retained earnings? There we go. Retained earnings is your closing 423. 423. Work backwards. It becomes plus. It becomes minus. We get our answer over here, which is 359 is our profit. Now, there are 5 marks for your operating profit. We still didn't get our operating profit. Still have to work a little bit more. How do you do it? We just got our profit for the year. So we need an operating profit. Okay, if you remember from your income statement, from sales less cost of sales, you get gross profit less other expenses, you get operating profit. That's what we're looking for. We don't know. Less interest, you get profit before tax, PBIT. Less taxes, you're supposed to get profit for the year. Now, profit for the year, we already found it. How much is the profit for the year? Yeah, this one is 359. Let's write it down. Profit for the year is 359. And there's a tax during this year, and I've given this information somewhere here. Yeah, there we go. Tax 2009 is 56. So we'll put it down. Tax, yeah, 56. There's no interest information, and thus you work backwards yet again. You're going to get your operating profit information, which is this plus that. You get 415, and that's your operating profit. That's the very first thing we put into our income statement, and just let's put it down. Yeah, there you go. Not the income statement, the cash flow statement. I beg my pardon. Yeah, and the information is 415. Okay, as you got our first working 415 operating profit, we'll look for the depreciation now and look at the information. They straight away given us. There is no need of calculation. They said charge for the year. If it is a charge, that's it. You add up this to information. Your depreciation is 24 plus 35 is 59. We'll take this information into our cash flow statement. 59, it's a non-cash expense, it's being added. Okay, any profit or loss on disposal? Yes, we have seen there is a profit, there's no loss. They said over here. Yeah, there you go. We sold some of the plant and equipment. The cost was 80,000, but we sold for a profit of 5,000. Should be taken away. Okay, -5. These are all in 1000 yet again. Yeah. Okay, let's go over the inventory, receivables, and payables from the question. Okay, we'll do these items inside the question to get the information. Okay, inventory from opening to closing, there's an increase. 210 minus 245, there's a 35 increase. That means we bought it. It's a minus. If we buy, money goes down. Okay, trade receivables from 187 to 162, it's a decrease by 25. That means we are collecting money quicker from our trade receivables. Better, it's a plus 25. Okay, trade and other payables from 152, it become lower, means we paid to our payables, and the difference is 9, money gone out. 35, 25, and 9. So inventory, there is an increase. Do you write down here? There's an increase. Yeah, it's by 35. Okay, money out. Trade receivables, it's a decrease. Good thing. We're receiving money quicker. 25. And trade payables, we're paying them quickly. So let me just double check. What was the figure? Yeah, it was from 152 to 143. It's a decrease by 9. So 9 minus is a decrease. And that's it. Add up all these things. Cash from operating activities is 450. Okay, let's look for any interest paid or taxes paid. Question. There is no interest. I don't see any interest. But taxes. Okay, if you know the rule is you always take the last year's tax opening. This time is 43. Or if there are 3 taxes given, you need to work it out. If you have seen my previous videos, the answer I have shown you. Okay, this time there is no interest. So no interest is just blank, or you need to write it down. Taxes paid, you don't need to work it out. It's just 43. From 453, take away 43, you get the answer. Net cash flow from operating activities going down there. 407 is a positive. Very good. Okay. Investing activities. 2 items we'll look for. Cash purchase of non-current asset here and disposal of non-current asset. Let's look for those items into our question. Okay. There we go. They've given us a note here regarding property, plant, and equipment. Okay, so 2 items, freehold property and plant and equipment. Okay, bear in mind this is the cost of the start. These are the cost. And in the question, top over here, non-current asset, these are net book value. They never told you, but these are net book value. These 2 items. Oops, look what came up. Okay. Go away. Yeah, all the messages go away. Okay, so yeah, these are net book value. Have a look at the bottom. Did you buy some assets? They said yes. Additions, 400 plus 140. Yeah, it's 540. You bought assets, money gone down. Let's put it in. There's no need of working. This time it's straight away given, but bear in mind, you might have to work it out. It's not always given just like this. So answer was 540. Okay, there you go. Working number, there's no working. Working for our working purposes is working number 3, I would say. Because, or 2, working number 2. 1 working we did on operating profit, and this is the second working, disposal of non-current asset. There are so many complaints for different students that I don't know how to do. Oh my goodness, let me tell you, there are only 1 mark for this. Okay, the disposal of non-current asset. Let's do the workings. Okay, let me tell you one thing, that there'll be quite a few working for this, and the mark allocated is just 1 mark. Have a look how many workings we got to do. Okay, so they given us cost of these two items. These two items makes our non-current assets. I just clean my board, it looks better. Okay, off screen obviously. Okay, so these two, if you add up, let's write in fact properly. Cost of non-current assets, 1360 plus 550, 560, no, yeah, 560, yeah. This is very blurry writing, print out in fact. Okay, these two add up, you get a figure of 1920. This is cost, all right? And this figure, they give you net book value. Okay, so net book value is 1361, yet again in thousands. How did they get a? They deducted from the cost. They have to deduct provision for depreciation. Yes, that's what you're going to do as well. And less provision for depre of property. And how much is the provision for depre for property? At bottom, have a look there. They said accumulated depreciation, that's property. Okay, 408, we will take it away. 408 is 8. Less, absolutely, you need to take away plant and equipment, provision for depre of P&E, and we don't know how much is the figure. Doesn't matter, work backwards. This becomes plus, this becomes minus, you get your answer over here, and which is 151. Okay, so we will put this information over here. Accumulated depreciation 151. Now from this we can find out the value of disposal. Yeah, this becomes minus, and you get the answer, which is 64. Yeah, there you go. We got near about all the answers. We just need to do a disposal account now. Okay, disposal. Why? Because some of the assets been sold during the year. Equipment, plant and equipment. Okay, also remember cost. The cost of the asset was 80,000 that been disposed, less provision for depre. The disposal items we just found 64,000. Yes, you deduct, you get net book value, which is 16,000. And there you go, sale proceed. Okay, we don't know, doesn't matter, but we sold at a profit. And profit of 5,000. Work backwards or just add these two. Answer is 20,000. And that's it. That's what you put it into the answer in your main cash flow statement, investing activities. And the figure is 21. Can you believe just doing all these works you get 1 mark? I would say ignore it. Don't do it. Write whatever you want to write. Don't waste your valuable time. Okay, add up these two. But obviously the examiner, if they put this type of answer or questions in future, it'll be worth of more marks, minimum 6, I would say. Okay, financing activities, share issue. Yep, we have issued some of the shares. Have a look here, 200,000 shares issued at 10p premium. Okay, what is the nominal value of your shares? There you go. Nominal value is 50p. So we have issued at 60p. 200,000 times by 0.6. Answer is 120,000 increased into your financing activities. These workings is just, I have said, like 9 maximum workings you have to do. It's not always. Well, 120, you need to put it in here. Loan taken, loan repayment, there's none. Dividend, we have seen 49. Add these two up, you get net cash flow from financing activities is 71. Okay, if we add all these 3 now, 407. Okay, where's my pen? Okay. One minute, something went wrong. There you go, I found the pen. Well, okay, so 407 plus 519 plus 71, you get your total. There's a decrease in cash flow, 41 plus opening cash and cash equivalent. Let's look for it. Our opening cash and cash equivalent from the balance sheet. Nowadays we call it statement of financial position. There we go. The opening is 27 positive, closing should be minus 14. Let's see whether it balances or not. Okay, 41 plus 27, yes, we get 14. It's negative, just double checking. Minus 41 plus 27, you get minus 14. And there we go. That's how you do a question. And to do this question, we had some approximately 26 minutes, but we have maintained our time limits and we managed it well. Okay, thanks for watching. If you want us to make more videos, you're more than welcome. All the best for your exams. Keep working hard. Keep aiming for the A star. Goodbye.